Hello beautiful students, I'm Brenda and I will be taking you through the tax liability for different sources of income. We have employment income, we have business income, we always have the company income, and for today we are going to look at the employment income. Tax liability on employment income. So my good students, you're going to learn about how an employee is supposed to get his or her income, the cash deductions, and the cash benefits and the non-cash benefits. So what are the cash benefits? We have the employment income, employment income consists of the cash benefits, the non-cash benefits. We also have the allowable deductions. So these are the inclusives that are supposed to be there in an employment income. Cash benefits, they are the cash benefits. Let's write them here. Cash benefits. We have the likes of the salary, the allowances, the bonus, etc. We also have the non-cash benefits. Non-cash, these are the examples of the cash benefits. The non-cash benefits, we have the free meals. We have insurance. Yeah, we have maybe the professional fees, membership fees, etc. We also have the allowable deductions, the examples of allowable deductions. Our allowable deductions, we have the likes of the deductions, the pay. We have the pay. We have the pension. Have the pay, the pension, the pension, the tax payable, or the tax deductible, cash deductible. Now these are the cash and the non-cash benefits that we have in the employment income. So my good students, we are going to look at the allowable deductions and the non-allowable deductions. So the allowable deductions in the employment income, we have the payee. The payee is the pay as you earn amount which is deductible by the tax authority due on the employment income. Now we have this as allowable deductions. We also have the disallowable deductions. Disallowable deductions. have our disallowable deductions. They are the deductions which are not deducted from the employment income. And we have the medical expenses. Maybe the employment contract have the medical expenses or the medical benefits of the employee. We also have the fringe benefits, the benefits in kind of value, which does not exceed 36,000. 36,000, the fringe benefits. We have expenditure on passage of expatriate only. So maybe there are conditions whereby an employee is sent to represent the business somewhere. Now, that the benefits that he or she gets is a disallowable deduction. It cannot be deducted from his or her employment income. The taxable employment income, it also has a formula, and we are going to write the formula. We have the taxable income equal to cash benefits plus non-cash benefits, we less the allowable deductions. We less the allowable deductions, and we get our taxable income. So we are going to make our taxable income of employment. Taxable, let's put it here, taxable employment income XYZ company. XYZ company, taxable employment income. We have the employment. We have the employment income. Have the shillings over here. Yeah. We have the cash benefits and the non-cash benefits. We are going to include them here. Up here. We have the salary. We have the salary. We have the commissions. We have the bonuses. We also have allowance. Yeah. We also have the benefits, housing benefits, house given by an employer to an employee, housing benefits. Housing benefits. We also have the furniture, electricity, water, telephone, education fees, the bills paid on behalf of employees' usage. So those are the part of the non-cash benefit. We have insurance premium paid, insurance premium paid, insurance premium paid. yeah, insurance premium paid. These are all our employment benefits, the cash and the non-cash benefits. We also have our allowable deductions. We'll just include them here. Okay, allowable deductions. For our allowable deductions, we have allowable deductions, just like we said. We have the pension. Pension is deducted from an employer, from an employee, from his employment income, and likewise the employer also pays pension to the employee. We have our pension, we have the contribution to host, we have the host. This is the housing plan, whereby an employee contributes some part of his income to pay for a mortgaged house, or a house, to pay for a house. We also have owner-occupier interest. Owner-occupier interest. And here, maybe the employee has been given a housing benefit and he pays some of the money or the rent to the employer. So here, that's our owner-occupier interest. So all these are deductions. As accountant, you need to put there the brackets to show that they are deductions. Contribution to host. We have the pension scheme. Pension scheme. So this is our taxable employment income. So the amount of tax to be paid by the employer on behalf of the employee. And with that said, with our formulas at hand and on our mind, we will do a question. We will get the taxable income. It will be just here down there. So we will do a question on the employment income. We will do a question right now on the employment income. So let's find some space. So let's do a question. on the employment income. Let's do a question. And we have question April 2022. We have the first name. April 2022. Question number 1C. The question reads, Kevin Baraka is employed by Hakika Limited as a sales manager. During the year ended 31st December 2021, he presented the following information for income tax purposes. He received a basic salary of 350,500. The company deducted 96,000. The company deducted 96,950 for his monthly salary as payee. He received sales commission during the year amounting to 1.2 million. He also received a 1-month basic salary as bonus in the month of December 2021. He lives in a rented house near the company where he pays a monthly rent of 40,000. The company reimburses him the rental cost incurred. The company provided him with a 1500cc saloon car and fuel for his traveling. The traveling had been acquired at 2,500. The traveling vehicle had been acquired at 2.5 million. During the year, the company incurred 320,000 as motor vehicle running costs. During the year, the company reimbursed him the following expenses. We have telephone bills, we have professional membership fees, we have office expenses. He also attended a 5-day seminar during the month of December where he was paid daily allowance of 6,000 for his accommodation. The company provided him with food items worth 25,000 during the year. He contributed 12,000 per month to an approved pension scheme, while the employer contributed a similar amount. Required 1. Taxable income of Kelvin Baraka for the year ended 31st December 2021. We also have number 2. Tax payable, if any, from the income computed in C1 above. Now we have our question at hand, and we are going to calculate and find the income tax of Kelvin Baraka. The income tax of Kelvin Baraka and the tax payable, if any. So to start with, we are going to write our heading for Mr. Kevin Baraka. Kevin Baraka. Taxable income for the year ended 31st December 2021, 31st December 2021. That is our heading. We are going to do our calculations right now. And we will start with the note 1. We are told he received a basic monthly salary of 350,500. Okay, we will start with the employment benefits. employment So we are going to start with the employment income. We have the employment income. And in this, we have a monthly salary. Monthly salary of 350, 500. We multiply by 12 because it is during the year. 12 months. A year has 12 months, and our basic monthly salary was 350, 500. So we will multiply by 12. We also have sales commission. He received a sales commission during the year amounting 1.2. Sales commission. We have the sales commission, which was 1.2 thousand. 1.2 million. We also had he received one month basic salary as bonus. We have our bonus, which is our 1 month salary, which is 350,000. 500. 350, 500. He also lives in a house rented near the company where he pays a monthly rent of 40,000. So this is an allowable deduction. We will include it in the down part. Let's head to the next note. We have company provided him with a 1500cc saloon car and fuel for his traveling. So we have saloon car. So the saloon car, we are going to compare which is greater, which is more, the 1500cc, the amount, and the cost. The cost of the car, 24% of the cost of the car. It's usually 2% per month. It's 2% per month for 12 months. So we are going to multiply the cost by 24%. 24%. So our 1500cc, we will check on the content of table. And the 1500cc saloon car, it has an annual rate of 69,600. 69,600. We also have the cost of the car, which is 24% of 2.5 million. 2.5. 2,500,000. 24% of 2.5. So we take which is more. The one which is more. The one which is more of this. So we will take the one which is more. Let's calculate it later. We are also told that during the year, the company reimbursed him the following expenses. So the expenses that were incurred, they were reimbursed to him. So whatever money he used, it was reimbursed to him. That means we have telephone bills, we have professional membership fees, we also have official expenses. So we will have our telephone bills, telephone bills. Our telephone bills, we are going to take 12% of the bill. 12% of the telephone bill, which is the one which is taxable. 12%, a portion of 12% of the bill, which is taxable. 12% of 120,000. 12% of 120,000. We also have, we are not going to charge tax on the professional membership fees. The professional membership fees, we are not going to charge tax. We are also not going to charge tax on the official expenses. Okay, so my beautiful students, you need to have that at the back of your mind. So no tax is charged on the official expenses. Let's go to note 7. He attended a 5-day seminar during the month of December, where he was paid daily allowance of 6,000 for his accommodation. We have accommodation for the 5 days seminar accommodation, which was 5 days on 6,000 per day. So we will get our income tax of the accommodation. We also have the food items. The company provided him with food items worth 25,000 during the year. So we have the food items. The items he received from the company or from the employment. We have 25,000 food items at 25,000. We also have, he contributed 12,000 per month to an approved pension scheme, while the employer contributed similar amount. Now we are done with the employment income, but we had we are done with the employment income. We are done with the employment income. We are going to write here the allowable deductions. Allowable deductions. Allowable deductions. Allowable deductions. And we have the pension. We have pension. We have pension, which is an allowable deduction. Our pension, he contributed 12,000 per month. So we have 12,000 per month. That means he contributed pension 12 times, 12 months. We have times 12,000. 12 times 12,000, which was the pension. We also had per month to an approved pension scheme, while the employer contributed a similar amount. So we have the pension as our allowable deduction. He also paid rent. Remember that it was in note 4. He lives in a rented house near the company, where he pays a monthly rent of 40,000. The company reimburses him the rental cost incurred. Now the housing benefit. We will have our housing benefit. He always pays 40,000. Put it's not an allowable deduction, it's a housing benefit. So our housing benefit, we will put it here, housing benefit that he gets, which he's reimbursed. The money which is reimbursed to the employee is usually a benefit. It's his own benefit. So our rent, the rent that he pays, he lives in a rented house. They are the company where he pays a monthly rent of 40,000. So we have 40,000 times 12 months. We have 12 times 40,000. This is our housing benefit that the employee gets from the employer. So we have 48,000. 48,000. 48,000. We also have accommodation, 5 times 6. 5 times 6,000, we have 30,000. 30,000 just here. We will also calculate 12% of 1,200. 12% of 1,200. We have 144. We have 144 100. 144,100. We also have 24% of 2.5 million. 24% of 2.5 million. Let's calculate together. We have 24% of 2,500,000. 2,500,000. We have 600. 24% of 2,500,000. We have 600,000. 600,000, which is more than the 69,600. So, my good students, you should be knowing the saloon car. The saloon car, we usually take the CC, the amount of CC we have given, and the cost. So we calculate them differently. So we will have our 1,500 CC on the content of tables. We have 69,600, which is lesser than the 600,000. So we will take the one which is more. In the employment income, we will take the one which is more. Now we will take the 600,000, which is our saloon car, our benefit. We will also calculate the 350, 500, 350, 500. We multiplied by 12. So, my good students, let's do our calculations. Let's do our calculations. We have 350,000. We multiply by 12. 42. 350. 500. We multiply by 12. We will get 42,06,000. 42,06,000. 42,06,000. My good students, we also have another calculation here. We have 12. We multiply by 12,000. 144. 144,000. So my good students, we are going to add the sum up of the employment income less our deductible allowable deductions. We less our allowable deductions. So take your calculator. Let's do it together. 4206,000. We add 1200,000. 1200,000. We will also add 350. 350, 500, which is our bonus. We are going to add the saloon car, which is 600,000. The more 600,000, 600,000. We are also going to add the telephone bills, 14,400. We also have 30,000 for accommodation. 30,000 for accommodation. We are also adding our food items, which is a benefit. We have 25,000. We are also adding our housing benefit, which was rented at the market price of 48,000. 48,000, which was the monthly rent payable by the employee, yet it was reimbursed with the employer. So that said, you have 6,473,900. That was our employment. The total non-cash and the cash benefits. We will deduct the allowable deductions. We have our answer here, right here. The answer. We will deduct the 144,000. 144,000. So our answer, we deduct 144,000. We have 6329,900. 6329,900. 6329,900. This is our total employment income less the deduction. So this is our taxable income. Our taxable income, we will write just below here, taxable income. So our question asks us to find the taxable income, which is 63,299,900. 63,299,900. That is our taxable income. Note 2 asks us to find the tax payable. So my good students, we are going to grab the 3 marks that we are given. So we take our taxable income. Our taxable income, which is 63 to 900. 63,29,900. 63,29,900. Yeah, this is our taxable income. So we are going to find the tax which is supposed to be given to the government. So my good students, we are going to take our exam paper, and on the table of contents, in the table of contents, we have the applications of the taxable income, and we are given the excess income and the range at which the tax should be paid. Now we are going to take our 10% of 288,000. 10% of 288,000. Then we add 288,000. We less from 388,000. So we are going to get 100,000. So this one we will multiply it by 25 25%. So the excess one, the excess from the taxable income, we are going to find the 30%. 30% of the excess. My good students, we are going to take 288,000. We add 100,000. The answer we will get, we subtract it from 632, 9,900. So, as a good student, you need to show your workings. 632, 9,900, we less 388,000. So our excess is 59,41,900. 59,41,900, which we will multiply it by 30%, which is our 62,621,3,500. 62,135,500. We also have 25%. 25% of 100,000. 25% of 100,000 is 25,000. 25,000. We will also calculate 10% of 288,000. We'll get 288,800. 28,800. Yeah, we will get 28,800. And here, my good student, we are going to include our payee, which was said to be our payee for Kevin Baraka was 96,950. 96,950. Yeah, 96,950. We multiply by 12 to get the pay for the whole year. So 96,950 multiplied by 12, we get 1,163,400. 1,163,400. Yeah. So that is our payee. And any other deductions we have? We also have the relief, the personal relief. My good students, always remember to key in the personal relief which you are given. Personal relief per month is 2,400 per month, but per year is 2,800. 28,800. Now, from our taxable income, we are going to deduct the pay and the personal relief. So, my good students, let's do the calculations. 288,100. We add 25,000. We also add 62,13,500. 62,13,500. Then we deduct the pay, which is 1,063,400. 11,63,400. We also less 28,800. So, my good students, taxable income, we will take our taxable income, which is Let's see. Yeah. Okay, we get, let's calculate again. 28,800. We add 25,000. Then we add 62. No, let's calculate here again. 30%. Let's do 30% of 5941. 900. 5941 900. Yeah, 30% of that we will get. So this was more. We will get 17. Sorry for that. 1782. 1782 570. So this will be, this will be our taxable income. 1782 570. We add 25,000. Then we add 28,800. Okay, we get 1,836,370. We less 11,63,400. Then we also less 28,800. 28,800. Our answer here, we get 644,170. So this is our tax payable. Tax payable to KRA. So this is our tax payable. So my good students, we found the taxable income and the tax payable to the government by the employer from the employee account. So my good students, make sure you do some other questions for you to be sharp on the questions to do with the income tax of an employee. So thank you, my good students, for your time, and let's meet on our other lesson. Bye bye. See you then.